Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Tuesday, July the 9th, 2024. I am going to start with the S&P again, and I'm basically just going to hang out on the 15-minute chart since that's where all the activity is now taking place. Everything below that in terms of the count remains the same. Just to give a quick review, I am continuing to count the finishing stages of what I believe will be the minor third wave. Underneath that minor third wave, we've got 5 waves of minute degree, of which we are in minute 5. Underneath that, we have 5 waves of minuet degree, of which we are in minuet 5. So inside of minuet 5, it breaks down to sub-minuet level. And within that one, I believe that we are still within the sub-minuet wave 4. I may have marked it yesterday looking for a completion point. That did not come through. Now, I want to explain one step further. Elliott Wave is not a science. It's an art. It was based upon human emotional reactions to a market move, to news, to whatever was going on at that time. It was designed and started in the 1930s and 1940s by R.N. Elliott. Now, what has changed over those many years, and particularly the last, I would say 20 or so, is the dependence on the market to being totally electronic and therefore with algorithms running all session long. In fact, whenever the market's open, it is algorithmically controlled. And what I mean is that the trades are being done algorithmically. There are bots that are out there searching for the trades. When their parameters are met, the trade is executed. There are portfolio managers and all the likes of money managers who are putting in orders all day long. And maybe they have a stack of buy orders, they have a stack of sell orders, and those rotate throughout the day. Then we have just all of the dealers, the option dealers, who are making markets in all of the underlying stocks, all of the ETFs, all of the indexes, and varied, of course, but there are markets being made on an options level pretty much across the board in all the sectors, in all the indices, and all of like treasuries and precious metals, etc. Now, what they are doing is, of course, they are responding because they are making a bid and an offer. And when the options flow or the order flow is in one direction, well, then they're forced to perform and do the trades. If someone's looking to buy the calls and sell the put, they're going to be the seller of the calls, they're going to be the buyer of the put, and then they need to hedge that trade. And so that is also something a little bit different in that the market is more dominated by that type of trade, being that it's all electronic. We have already seen a strong push towards calls. We're seeing, I just think, a very large amount of calls being stacked up in the June, September, December cycle, the June, September, December cycle. So it's actually March, June, September, December cycle. So when we see that the open interest grows substantially in the calls, not only in the S&P, in the ES, in the spiders, in the Qs, in the TQs, the SQs, but in all the underlying stocks as well. There is a huge amount of open interest being built up in the calls that are expiring in September and expiring in December. So by that fact, it continues to push in one direction. We're seeing other changes. So how does that affect the Elliott? Well, first of all, the Elliott is actually right now, because the market is fluid and moving every day, so does the count. And when we're getting an upward trajectory to the market, we're looking for an impulse wave, which we're counting out, and that's 1, 2, 3, 4, 5. But the market continues to extend. and it moves higher. Now, is there a way that I can tell that it's going to extend even more? Well, by the count, yes. But you have to wait for the market to kind of fill in that blank, so to speak. So what I work with are Fibonacci levels, and Fibonacci levels give us an indication of how high a market may need to go before it completes a move. And there are Fibonacci relationships between, for example, a fifth wave and a first wave. So we connect those on a Fibonacci basis to give us an indication of where this fifth wave may or may not get to. Now, when the market is in motion, as it is in now, within that minuet wave 5, the minute wave 5, and now we're still within it, but it looks like here in the S&P that the market may have at yesterday's highs completed actually today's highs. It may have completed the sub-minuet wave 3. Now, I understand that I had marked that lower. I put the 4 here because that's what it appeared to be, but then it continues to extend, which just pushes the balance to be recounted. So I continue to look for what is best, how the market is best reacting to what's happening. And as it cruises past fib levels, then I have to reconsider that starting from this level, something else, still a 5-wave structure, but it's extending. Now, the difficulty is that there are a lot of false breaks and sells and breaks along the way. That doesn't leave a clean picture to be taken. Now, I say all this because it seems to me that people are looking for certainty. Well, you're in the wrong place. Not me, the market. There is no certainty. You might say, oh, well, it's going to go up. Well, really, if you can tell me with 100% certainty forward that that's what's going to happen, good luck, because it doesn't. With hindsight, I could say, yeah, market's going to go up because it did. So again, what I'm attempting to do is to kind of give the best trajectory or thought to what the market may continue to do and what may be left to finish up this upside move. So here again, in the S&P futures market, it does appear that wave 3 did extend and now likely completed here at this morning's highs at 56.45. Now, what that does suggest is that we're in that 4th wave. Now, coming down, so let me just try to open this and see what I can get inside here. And let me move it down because I like to see how it all is going to come through. So you can see what I'm talking about here. This is just very disjointed, but yet that's complete. That is something down, something up, something down. And it's hard to look inside a 15-minute chart to decide, is it 5? Is it 3? But the overall pattern suggests that it was 3. Coming down and then back up. This 3 down and then 3 up. So what was it in total? You're going to have to make some choices. My choice is that I brought the first wave up a little bit. And let me just reset that now. In that, all right, so I'm going to go back and I'm going to start back on that 15-minute chart because I want to include that low. That's the 4. So previously I had labeled 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, but I had figured that 1 could have been done here, and that would 2, and then we start on the 1, 2, 1, 2, but it didn't. It didn't pan out. So I go back and I readjust to putting the wave 1 here and the wave 2 here. That is corrective. This is impulsive, and it could be 1, 2, 1, 2. But 1, 2, 3, 4, 5 fit instead of trying to count 1, 2, 1, 2. That did not work. So this is the process. I'm just now trying to walk through with you guys. So we have 1, we have 2. Now we're back into that 3rd, which again is very disjointed. And at best, what I could try to do is put the 1 and the 2 here almost, and then the 3, the 4, and then it comes up in a 5, which is a mess in and of itself. So at best, I can put the 3 here and think that we're now working through a 4th wave. Now, taking a look at that, I can come and figure that it's likely probably an A wave down, a B wave up, so we likely still have a C wave down. Now, I've put here the Fibonacci levels that correspond with a 4th wave. The most popular, let me just say, the most common is 0.382, and that comes in at 56.2250. So, but just above there, we have on the 15-minute chart, the 15-minute 200 period moving average. That remains support. It's moving sideways now. It remains support, about 56.25. So we have a little bit of a window here. If it pushes through that, then we'd be looking for it to come down to the 50% level, which is the next in line, and that would be at 56.15. Now, I'm expecting for this wave 4 to complete and then yield to one last rally back up. Can I say what that 5th wave is going to look like? No. I can put up fibs once I do get a 4th wave low. And for all I know, it occurred today right there. I don't believe that it did, but we have to wait and see. And what's going to be the clue? Well, the market manages to get itself back above, let's say 56.40. Or 50% of this back up, which is going to be about 56.35 to 40. If it breaks there, then it's pretty said and done that we're going to probably break 46, which is the current high of 45, 46, and then start heading towards that next level. If that occurs, then I will run the fibs to this 4th to produce levels for where the sub-minuet wave 5 may get. Right now, what I do have is that on the minuet wave 5, 100%, so the equality of wave 5 equaling wave 1 comes in at 56.64. So that resistance remains there. Above that level, we start to get a nothing in between. And let's remember that anything above today is a new all-time high. So where can we peg resistance? We have never been at these levels before. So that adds another layer of complexity as to try to figure, well, where's going to be resistance? So what only measurements that I have are Fibonacci. And there's number sequences, and we're taking a percentage. If the move moves to this level, this is the most common. This one comes the next. So that's how we determine here. But if we break 56.64 with any type of power, then without that 4th wave being in place, we don't really have anything until we get up into these levels. And the white colored, that is the minute 5th wave. And that would be equal to the minute 1st wave at 57.59. And above that, we have the minuet 5th wave, would be 1.618 times the length of the minuet 1st wave, and that comes in at 57.63. So we have a little bit of a cluster there. So first, though, I'm looking for this to kind of finish this 4th wave, bring itself back down. There's our first support, 25 down to 22, and then we have 15. So it's not a whole big difference down here. The market can move pretty quickly from 33, or wherever we are. Yeah, I think we are 33. Yeah, I think so. Yeah, offered. So from 33 down to 15, not all that great shakes for the market to drop 15 to 17 points. Then I would expect we're going to kind of go up. Now, what could drive this? Well, we had Fed Chairman Powell speaking before the Senate today. It really didn't do anything to the market. I was there. It did, it rallied because it needed to rally, and that's what the direction the market is already going. The declines were still market generated without, saying, oh, it's because Powell said this or whatever. So I'm going to assume that that's maybe going to be the case again tomorrow, because tomorrow he speaks before the House of Representatives, which should be pretty interesting being that who's in charge of all those committees. So it could be very contentious type of testimony. Also tomorrow at 10 a.m. Eastern, we have wholesale inventories, and that's just when Powell is supposed to begin his testimony or testifying before the House. The larger market moving economic numbers that come out on Thursday with CPI, and then Friday with producer PPI. So those are the two big ones. And so the market may just be hanging out, continuing to fill their pockets, hoping that those two numbers are going to show some goodness is left in the world, and that inflation is coming under control, and that we are going to get a rate cut. All before September expiration, I suppose they wonder. In any case, we take it day by day. So that's the S&P. Let's go over and take a look at the NASDAQ. NASDAQ was just as wild and as crazy as can be. And it just seemed, here was something interesting, that because the Dow and the Russell both started off lower. Then they both managed to get higher. Then they all both sold off. The NASDAQ opened up strongly higher, then sank and went negative, and is finishing higher. Interesting type of day. Same with the S&P. Interesting day. So we had this dichotomy going. So here in the NASDAQ, same deal. Got the 1 and the 2, and the 3 just extended up to today's high, which is 20,771.75. We'll call it 772. It's quite, to me, interesting that the markets are this high. So let me make my adjustments to this, since I put it up and then I forgot to just take out what isn't applicable and show you what's left for, again, a fourth wave that I think is in progress. Now, granted, it came down, broke the 200, came down a little bit below it, and then just rallied all the way back up. But it's not really putting in, it's kind of just, a flag. And so I'm thinking that this is A, but it could be A, B, C. I got to be honest with you, but it still could be A of the wave 4, and then we have a B of the wave 4, and we come back down. In which case, if let me just put some fibs to this thing. If it is going to be correct, then what are we looking for? We are, and the market's really not even done yet. It'll be here in a minute. We're looking at 20,593, and then we have fib support underneath that at 20,576, where wave C would be equal to wave A if that's what's in progress. 100% is at 20,533.75. So again, we're rolling around this upper range. A total break below that brings us down to that 382 level, which is 20,455, 456. And then again, the C wave being 1.618 of the A wave comes in at 20,437. All are valid in terms of levels that can be reached, as are these, but I'm not necessarily looking for it to drop that deep in a small fourth wave. So if it starts to, we'll take another look at how it's dropping and where it's breaking, because we still always are going to stand the chance that it is all done. And now we've moved into that third wave. Now, again, if you're looking for certainty, right now in these markets, it does not exist. So you give it your best shot. Now, I will tell you, it's like part of the reason that I became a day trader is because of the uncertainty in the market. To have to determine and eat from day to day, it's like, well, how are you guys going to come in? You're going to be like, okay, we're really upset with that number, and boom, you hit the market and take it down. Or we love this, and boom, they run it back up. So I didn't like running positions that were not really within my control and getting kind of bopped around by algorithms. So I chose to become a day trader. So I don't carry positions overnight that leave me open to what the market's will and whim might be. So as a day trader, you're coming in clean every day and you're taking advantage. And right now, it really does kind of come up as like you try to make your money quick because the way the markets are trading, you'll get those quick moves pretty quick after the opening. From the opening for like that first half hour, maybe hour. And sometimes under a little bit more normal conditions, we get that where it could roll and last the day or at least the morning session. And as a day trader, you get to take advantage of that and you're done. And you're not presenting yourself or telling yourself that you have to be bullish and or bearish. Now, just to kind of fill in the blank, I do have a trade room and I run it together with Sasha Goring, who is my colleague, and we present each morning very detailed analysis on an Elliott basis and on a Fibonacci basis for what could happen. Sasha's been very great about presenting where the market breaks may happen and what the response should be if this level is broken either up or down. And most frequently, I must add, very frequently, that's exactly what the market will do. And plus, just being able to read the candlesticks, that's the other part. When you're working off of a 5-minute, a 15-minute, and maybe trading off of a 2-minute screen, you have the ability to really read candles and catch quick shifts in the market. And here in the NASDAQ, and also the S&P, but more in the NASDAQ, those quick moves will be 10, 12, 14, 15, $20, 20 NASDAQ dollars, and it's $20 a point. So if I'm saying it's going to be moving $20, that's times 20. 20, it's 4 ticks to a point. So you're talking like if it's moving $10, it's 40 ticks. If it's moving $20, it's 80 ticks. That's a lot. And so that all presents us with some pretty good choices to make and some good trading when they happen. Now, back here to the NASDAQ. So what I'm going to look for, basically the same thing. So at least both the S&P and the NASDAQ are kind of lined up to finish a 4th wave and then possibly move into that 5th wave. Now, again, can I tell you if it's going to extend or not? No. Would I anticipate that it will? Yes. Now, we may get up there tomorrow. If we get up to make new highs, then again, we've got Thursday and Friday to deal with, CPI and PPI. And depending on what they come out, I believe the market will react pretty strongly either way. So, upside, what do we have thus far? Right now, I don't have anything outside of here, which again, this is for the minuet 5th wave. I have 1.618, that's at 20,850, 1.886, which is another fib number, and it's a level that algorithms love, comes in at 21,021. Now, could the market get there? I'd be a fool to say no. Of course it can get there. We are now watching algorithms just absolutely gobble, have to have. They pick one. Today, it was a lot in Tesla. It was a lot in NVIDIA. SMCI was up most of the day, decided to go down at the end of the day. So it's hard to pinpoint and say, well, this is going to do that, that's going to do this. It's whatever the flavor is of the day, and they come in and they take, and they do. So again, yes, these levels are possible. And then we have the minute 5th wave equality, so equaling minute 5 equaling minute 1 at 21,381. And those are up there. Those are up pretty high. So again, I am considering and still looking for additional upside. Let's see if we can't get a 4th wave completion point. Could happen overnight, could happen tomorrow during our session, but looking for that completion point and the rally to pick up again. The next update will be on Wednesday, July the 10th.